people are just trying to find interesting ways of making investments that have a lot of potential to grow. I think one of the main reasons tokens got a lot of attention and capital was that because most investors want access to like young, early, exciting businesses. In the equity markets, it's taking longer and longer for businesses to go public. The market is tired of tokens that have no value. I like where we're kind of heading towards now, which is more fundamental driven, like building a business, building revenue. And then if you launch a token, for some reason that actually makes sense, and you can create value for that token and for the investors.
So, hello and welcome to another episode of Ways to Wealth. Today, I'm joined by Nawaz. Nawaz, why don't you give us the TLDR on who you are and how you got here?
Yeah, thank you for having me, Charlie. My name is Nawaz Ahmed. I am a general partner at GD1. We're a venture capital fund based in New Zealand, investing in early stage technology businesses. Specifically, I manage a early stage crypto VC fund, so investing in young businesses in the crypto space around the world at the really early stages.
Nice. So you manage that fund, and then there's two funds in GD1, right? Is that currently true? And are you involved in both?
Yeah, so we have two funds. One is our main fund, currently Fund 3, which is about $150 million, investing in New Zealand technology businesses across a bunch of sectors like SaaS, enterprise, health tech, deep tech, and the crypto fund, which is much smaller, global mandate, investing in mostly crypto native businesses. And I spend most of my time on the crypto side and occasionally help out on the other fund when required.
Oh, that's cool. Yeah, nice. Did you always know, like, how does one get into VC? Because I've built a lot of relationships with VCs, but once they're VCs, so there's probably a whole kind of getting to that stage where you're actually in the industry and you're actually adding value. And I know like Robbie's story from Ice House Ventures.
Yep.
That's a really interesting one, very entrepreneurial and kind of almost like an apprenticeship model.
Yep.
In that case. And then, yeah, like when did you decide that was what you wanted to do, and how did you even start thinking about kind of getting into that?
Yeah, it's quite interesting. Like VC, venture capital seems, I think in general, is still a relatively hard industry to kind of get into. My pathway into it was really as I was finishing my master's at the University of Auckland. I did an internship at Uni Services, which is a commercialization department at University of Auckland, and they have a fund which invests in ideas that are coming out of the university. So staff and student ideas, research. And that was my first exposure to like startups and investment and all of that type of stuff. And I found that really fascinating. I had my own like small business at that time, which was a subscription box for university students, which I ran for about 3 years. And it was really interesting from the point of view where, I had built this small business, but then while I was working at Uni Services, I was able to see like the difference in like a small business and the businesses that the university was investing in, which was, had significantly larger kind of scale that it could reach. And they were just a lot more impactful. And my kind of journey then was kind of went away from venture capital and investment by falling down the crypto rabbit hole and just spending time in the world of crypto from 2017 onwards. Most of that time was working with investment and advisory firms, not in the investment capacity, mostly on the advisory capacity. So working with startups on, product and strategy and capital raising, helping them kind of think through things. But, I always wanted to go back into that investment type of stuff I was doing at Uni Services.
Right.
I tried to get jobs at local venture capital funds in New Zealand. Basically didn't get any jobs, really struggled to kind of crack that. So decided, I still wanted to learn more about it. So ended up becoming an angel investor. So investing my own money into like early stage startups as a way for me to learn more about venture capital. And that was, I did that for about a couple of years, about 20 or so investments, mostly outside of New Zealand, mostly early stage crypto companies. And again, while doing that, while working, I was still trying to find roles in venture capital. And then I realized, a lot of the New Zealand funds were quite skeptical of crypto. They didn't really want to kind of dabble in that space. Maybe that's why they weren't kind of like hiring me.
Right.
Again, I'm not 100% sure that's the reason.
Yeah.
But I then ended up deciding, I want to do it. And the only way I could do it now is probably start my own fund.
Right.
So I ended up kind of thinking through that process, and the managing partners at GD1, I had gotten to know them, over a few years, and they became good friends of mine, and they kind of followed my journey as well as I was angel investing. And when I told them I'm going to be doing this, small crypto fund, they invited me to do it as part of the larger GD1 firm.
Cool.
That was amazing in terms of them believing in me and my strategy of investing in crypto, and allowed me to kind of go basically then full time into venture capital, raise a fund, and start investing.
And are you like primarily raising the entire fund base of the crypto fund, or are you also doing some capital raising for the other fund? Like, are you is it an 80-20, 90-20 kind of split for you?
For me, it's mostly the crypto fund. So I focus on raising capital for the crypto fund and then investing it.
Right. So you're really focused on that is your baby, and then
100%.
when you get shoulder tapped, it's because maybe you have an insight or you can add value and help with like due diligence and stuff like that. But you don't really have to worry about the primary fund. You're kind of like an offshoot.
Yeah. So you can think of it like a small incubation within the wider business of GD1, where I'm solely focused on this and growing it.
Yeah.
But definitely when required, I can help out with other parts of the business.
Yeah, cool. And so people think of crypto, they think of investing in tokens and and different cryptocurrencies. Like, is that what you're doing, or like how does the typical structure differ from your standard venture investment that might be on a convertible note or a equity investment? Like, how does the dynamic work in crypto in that regard? Like, are you investing in the business? Are you getting a portion of the supply of maybe a token? What?
Yeah, I think so. There's a couple of different ways. The way that I usually invest is because we invest very early stage, so mostly generally first rounds or second rounds of capital. We are either investing in like equity directly or into a safe note.
Yeah.
But usually with both the safe and the equity, there's a side letter, which is essentially a token warrant. So, which just means that, if the company at some point decides to do a token and it makes sense, then we as equity investors would have a portion of that token as well.
Oh, okay. And at a discount, is it like an option with a strike, or is it just like, hey, we get some of the supply that's equal to our equity ownership?
Yes, it's essentially in that type of structure, but it varies case by case. And there is also, sometimes there are investments which are purely token only.
Yep.
I haven't done many of those types, but that's definitely something that, early stage crypto focused investors also look at.
Oh, okay. Yeah, because I know like Andreessen have done a lot of that where they're getting direct action in the tokens.
Yes.
And potentially also getting liquidity faster, maybe.
Yeah.
I think that's something that maybe a dynamic that happened in the last bull run when the money was a little bit cheaper.
100%.
And that's kind of gone away now.
Yeah, I think that the market has evolved a bit in the sense of like it is taking a little bit longer for companies to decide to launch a token. Sometimes they're trying to time the market, which is always difficult to do. And then there's also a feeling that the market is tired of tokens and has no value.
Right.
So, and I think that's a great thing, like in the sense of like, you should be building a business that has value. Previously, there's been a lot of like tokens that would launch, and essentially there's no real value in the business. It doesn't actually end up making anything, but for some reason, all the token investors make a lot of money just because they were early. Um, yeah, I like where we're kind of heading towards now, which is more fundamental driven, like building a business, building revenue, and then if you launch a token, it's for some reason that actually makes sense, and you can create value for that token and for the investors. Yeah.
Yeah, I used to do this thing where I look at all the utility tokens and utility projects and then compare their market cap to like comparable public companies and their multiples. And that's kind of what like made me aware of like kind of, I guess, the level of which the utility side was happening at the time. And this was quite a few years ago. This was maybe 4 years ago.
Yeah.
And then the sheer market cap of it. But the cool thing is you can actually measure, right? You can be like, well, this is what this company is doing. It's got a token, it's got a market cap. And now here's a public company or even a private company. What's the sales multiple on both? So you can pretty easily work that out, which is cool.
100%. I think one of the main reasons, like historically, tokens got a lot of, I guess, attention and capital was that because I feel like retail investors or, most investors want access to like young, early, exciting businesses. And in the equity markets, it's taking longer and longer for businesses to go public. Some of them are not even going public after 15 years. And then when they do go public, it's at like pretty incredible valuation. So then the growth from there is generally limited.
Yeah.
So the tokens kind of presented an interesting, I guess, avenue for those type of investors looking for high growth opportunities.
Yeah.
Sometimes it translated, other times it didn't. But I think that kind of showed some of the market sentiment of like people are just trying to find interesting ways of making, investments that have a lot of potential to grow rather than just grow like a little bit because they took too long to come into the public markets.
Yeah, it's kind of definitely has that direct access democratization feel. And I think that was in a sense the promise of initially ICOs in 2017, and then what we saw kind of going forward and like what people tried to do with DAOs and things like that. So there's obviously a bunch of use cases. Like I think we've talked a bit about stable coins and how that kind of can shape up, and obviously the sheer amounts of profit that some of these stable coins are actually generating, especially because they don't pay a yield on the dollars. And so we talked about was obviously can you? And the way the regulatory structure works, at least in the US, you can't really pay a yield. It changes the whole game. And it's going to continue to be like that.
Yes.
Because banks are lobbying for that.
Yes.
Because banks want to be able to be the ones to give interest. They don't want crypto to come in and basically have capital move outside of the financial system because it would affect their business negatively. It would mean that they would have capital requirement issues, maybe.
Yeah.
If you think about fintechs, even like us, right? Like what we're doing is we're democratizing access, yes, and we're disintermediating so there's less, so there's more margin to give to customers.
Yeah.
But ultimately, it's still in the banking system at large.
Yeah.
Like so, even though we may have taken, let's say, $100 million from a bank, and now that $100 million is actually receiving a really competitive interest rate because it's got its cash in Acuity accounts, and all Acuity accounts get interest on the cash.
Yes.
If you're in our suite program. But that money is really still in the banking system. But what we've done is we've helped by having the relationship with the client and advocating for the client through our product, we're then delivering margin to them. But it's still, in a sense, like only one step removed. It's still in the financial system. It still doesn't create kind of runs on banks.
Yeah.
But if you would actually have capital move into kind of stable coins that were able to also pay interest effectively for those, especially for the US market.
Yeah.
Less, I think, less necessary around the world, like in other areas. That could be an existential threat to the banking system.
100%. And I think you see that with like the new bills that are going through the US government now around stablecoin regulation, and they're quite driven by the banks to try and protect their interests to an extent. Uh, it sounds exciting from the outside that the government is looking at it, but if you look at it carefully, it might not be the best, at least for like the crypto native companies who are building from the grounds up.
Yep.
The banks will obviously be trying to protect their interests and stay as relevant as possible and show that they're trying to adopt this technology, but still, I guess, obstruct like the access
That's right.
to regular users.
Well, I think what happened, right, is that the debanking didn't work.
Yeah.
So then now there's a re kind of thinking around how to but stop the rot, right? They're trying to basically reduce the velocity of which money leaves the banking system and find ways to recycle it back in, or at least give them the flows through.
Yeah.
Which are some important things for them, right?
Yeah.
Yeah, it kind of fascinates me. Like, I often look at it as actually, it's not that regulation is bad, it's that regulation is influenced by lobbyists, and lobbyists are incumbents. So that's kind of the best way to think about like when there's legislation.
Yes.
So, what's the incentive? What's the overarching incentive of the lobbyists? And that's basically the incentive that regulation will get to, because those are the people funding it.
100%.
And I think the only reason you're seeing something slightly different in New Zealand right now in fintech specifically is that you have the regulator and the government at large, and actually the social sentiment of do something about these banks that are taking way too much margin.
Yeah.
And then that cascades down to other services that are also probably taking too much margin.
Yeah.
So like we're in a unique place where we have the backing of the government and the regulators, because most of the people profiteering are not in New Zealand, they're offshore.
Yes.
So we're in a great position in New Zealand, but that doesn't necessarily mean that that's going to translate in the US.
Yes.
And US regulation, like you say, may actually be working against decentralization and kind of the larger mission I think that crypto kind of has, and Bitcoin and the technology had for what's possible.
Yeah. No, I think that's a great point. But it's the unfortunate way of like a lot of these, like New Zealand and some other countries really follow the way that the US kind of regulates.
Yeah.
So you're right in terms of our positioning for fintechs is quite different.
Not for crypto. We're really bad for crypto. Like it's really hard to operate in crypto in New Zealand, right?
100%.
But with fintech specifically, there's a lot of motivation.
That's right. Yeah.
And in Australia, they're even worse in terms of crypto. They are totally, but then that makes sense because their tech oligarchs are banking oligarchs.
Yes.
Right? Like the banking sector runs Australia, therefore New Zealand too.
Yes.
Whereas, it's a bit more big tech and other industry that's working in the US. Whereas in our part of the world, it's dominated by,
the banks. Yeah, 100%.
I guess you're right. Like that's probably what we have to look forward to in Australia, therefore New Zealand, or New Zealand and Australia roughly at the same time, because those lobbyists are going to be banking heavy. So you can imagine that there'll be a lot of pushback around potential kind of stable coins that are actually giving you interest.
Correct.
Yeah, I find it very interesting. I think it's like it's very interesting, but it's an industry of innovators. So you're going to find people are going to just continue building. That's what's obviously happened.
Yeah. Well, I think the biggest part of, crypto as an ideal is that, it's decentralized, and a lot of the things that can be created and software that can be created within crypto doesn't technically have to be within the jurisdiction or specifically targeted to a geography.
Yeah.
It's quite open and anybody around the world can access it. And I think that's the really interesting part, that, when you build something in crypto, you can be global from day one and really just access whoever really requires whatever service that you're offering. it might be stable coins, it might be, exactly some yield bearing stable coins, some way to manage your wealth, or, Bitcoin itself being, a way to protect your wealth and not have, governments essentially access it.
Yeah. I think that regulation hasn't helped Bitcoin, but the Silicon Valley Bank instance did, right?
Yep.
Another thing that has benefited is really kind of this volatility. It's kind of, I've always previously seen Bitcoin as a basically high beta momentum trade, because that's what it has been and that's what the correlation shows.
Yep.
And now it's kind of that correlation is somewhat broken and ad hoc, where sometimes it's a high beta momentum trade and sometimes it's a fear and a store of value trade that's basically a representation of a mistrust of the US, but also governments at large.
Yeah, I agree. And, you mentioned Silicon Valley Bank, and I think that's a good example, at least for people in the Western world, to kind of understand, they don't really have control over their capital.
Yeah.
But I think, the rest of the world outside of the West already deeply understood that. So yeah, adoption is very clear over there. In New Zealand, it's hard for us to kind of see the value of Bitcoin because we have such great, financial infrastructure. We have a stable government. We're not really afraid of our money being lost.
Yeah.
But, other parts of the world, they don't have that privilege. So it's always difficult for people here to kind of understand the value because they compare it to their circumstances. But globally, the value is very clear when you look outside of New Zealand, Australia,
especially in remittance and all sorts of different things, like the cost of remittance.
Yeah.
And how actually and in a sense we're seeing this even with I was even talking about buying fractional shares on specific platforms are for us, compared to us 5 times more expensive. So yes, there's a cap on trading perhaps, but actually for the people that need the most, or they're furthest away from their goals, probably they're the people investing the littlest, and they're actually still being charged the most and actually way above market rate.
Yeah.
So, and it kind of talks to this point around the people that are in countries where they're most vulnerable to having their assets stolen or being uninsured or just vanishing because of corruption or kind of an unstable situation. They're traditionally pay huge amounts, up to 30% sometimes, to moving money around.
Correct.
So they're being exposed the most, even though they have the littlest. Yeah. So I that's something that's always been really that I've always found very interesting and bullish around the space. And then there's obviously the speculation side that you got to marry. I think that in any new technology, there's always a lot of excitement, and excitement breeds speculation. So it's
apparently crypto being a financial technology, it takes that speculation to another level just because things are liquid.
Yeah.
Other technologies may not specifically be tradable or liquid for you to see that reflection. It's very hard for you to speculate on AI specifically. You can still speculate on, you can see the value of things like NVIDIA and Tesla markets, right? But you can't directly speculate on it like you can in crypto.
Yeah, and it's just the dynamics around a liquid auction-based system and what that can do for price fluctuations. I often go, hey, if your house was listed in an auction-based system that anyone could basically bid on at any time,
yeah,
you would get a true appreciation for the volatility that's hidden in certain financial products. So, venture also has that. Venture, private equity, and housing all have a benefit that they don't have the same volatility on a mark-to-mark basis.
Yes.
But under the hood, there's the same volatility there. Sure, they don't reprice.
That's right.
Which helps people deal with the volatility because it's not marked. Right? You're like, oh, there's volatility in the economy, but as long as I don't sell my house and I just keep waiting for I don't have to think about, it's not as visceral, right?
Correct.
Whereas crypto is an auction-based system that's always open. Therefore, it's the most visceral because when liquidity leaves the market, then it's really clear that you can't always basically get the price you want. Sometimes there's no buyer.
Correct.
And that's like a dynamic that people don't really understand about liquid auction-based systems.
Yeah.
And New Zealand has the whole scarring situation of the 80s. I think it was the 80s, right? When there was a bubble here and everyone basically, were leveraged on the homes, used that leverage to basically buy public equities, and then the equities got wrecked, and then they probably all liquidated at the bottom.
Yeah.
Because it's a public auction-based system.
Correct.
So it's kind of like, it just goes to show how like that's like leverage cutting two ways, and also how just because no one turned up to buy today doesn't mean that asset is actually worth less.
Sure.
From a fundamental basis.
For sure.
But basically the people that are willing to come and buy today might be setting a price that's dramatically lower than yesterday.
Correct. Yes.
And yeah, so I always try and stress that, because I'm like, really what breaks markets is the lack of buyer in the market. There's no liquidity. There's no one picking it up.
Yes.
And there are these people called market makers in public markets that are actually paid essentially to provide liquidity to the market.
Yes.
And there are people in crypto that also play that market making role.
Yes.
But it's less regulated, and also there's just probably less capital and ability for them to go to the lengths that, market making hedge funds can.
For sure. Yeah, the size is very different to like equity markets, right? So there's still a long way for like crypto, like the size of the markets to get to before you can reach that level. And I think like that also translates into volatility. Like the more it grows, the more capital that comes into it, the more institutional support, I think the volatility kind of spreads out a little bit more and becomes, not as volatile as it was 10 years ago. Like probably more volatile than, comparables, but less volatile than it used to be.
Well, I mean, I'm not saying that Bitcoin's a commodity, but it's kind of acts with some of those characteristics of a commodity where the price can change dramatically overnight.
Sure.
Based on changing fundamentals, like, or people's views, really. A little bit like how gold can be highly volatile, right? Even though the trend is actually pretty strong and it's well intact now. But if you had, 4 years ago, you'd be probably saying something different, which also kind of talks to the point around, like there's something to be said around like dollar cost averaging and like thinking about your strategy around your timeline.
Yeah.
If you're in the 20s, in a sense, you'd be happy for there to be a huge crash and there be a 10-year net nothing, right? When you went from 2000 to about 2013,
yeah,
that was like where it got back to that 2000 level on like some of the indexes.
Yeah.
So for if you're in the prime of your career in that time frame, that's a like concoction for real growth and compounding effects taking place.
Yeah.
Whereas, it's always tough if you come into a hot market, kind of use all your ammunition, and then you feel bad because the auction-based system has
better time to buy later.
Yeah. So it's but I went off tangent, but I was also thinking like around, going back to the banking point and how people are kind of not so incentivized to adopt certain technologies or don't see the need because they don't have that visceral understanding of the true problem that exists in other areas of the world. And I think it's quite interesting, right? Because everyone really dislikes banks here because most of them are Australian, and they make a lot of profit. And typically the average household in New Zealand is, especially over the last couple of years, have been heavily impacted by rising interest rates.
Yes.
And all their excess cash flow has been diminished.
Yes.
And that's where a lot of small business funding actually comes from, is actually really housing equity. So it's kind of affected our economy too.
Yes.
And then net immigration, right, away from the country as well, which these are kind of really key factors that are going to, like, in retrospect, be like, oh, well, obviously. And and potentially one of the worst like absolute drawdowns I think we'll actually see.
Yes.
But people still don't want to adopt other options as quickly as they could.
Yeah.
There's $190 billion of deposits that could be getting more interest, but it's still sat in those same bank accounts. So there's like a mistrust for banks and like a bit of a negative sentiment, but there's still a perceived safety.
Yes.
Like rather the institution I know.
Yeah.
Even if I'm annoyed, but unfortunately, you have to vote with your feet. If you want banks to make less profit, you have to change your consumer behavior.
Yes. I agree. And I think one of the other problems is like the perceived safety is probably one of the bigger reasons people stay. But the other one is if there is another option, I feel like it's like the complexity and the hurdles of getting capital to there is like very high. So it prevents you from just going through that mission because, it's just too tiring and you rather not think about it.
Yeah, it's confusing. And I think one of the things that because it's all kind of like made up margins as well, right? You kind of get to set your own margin.
Yeah.
And crypto margins and like fees and how fees are charged is really misunderstood.
Yeah.
Like a lot of people don't really know or understand how much they're being charged.
Yes.
Fees are notoriously high if you compare it to trading kind of equities.
Yep.
Or ETFs. So like there's a long way to go, but obviously it makes sense that there's a discrepancy right now. But over time you would expect that it gets lower. And in theory, if the argument around crypto is correct, it should at least be the same cost to transact, more likely, if not actually cheaper.
Yeah, I completely agree. And I think it's a matter of like infrastructure. There's some elements of like regulation, on and off ramping, like fiat create some of the.
I mean, that's where all the issues lie.
Yeah.
In off ramps.
Yeah. So I think as that kind of gets better and better, hopefully we become, cheaper to transact and other things.
Yeah, I kind of see the world as like this splitting force into like three directions, like decentralization, east and west. And like you're going to have basically almost like three reserve currencies. And then the game is going to be how do you basically arbitrage and off and on ramp into the different kind of ecosystems.
Yep.
And I guess I'm kind of seeing a bit of a split between the West and the East, and maybe it's the BRICS can actually make some real headway, but maybe it'll be the yuan instead. And then obviously there's the US dollar kind of status quo, and then there's crypto. And I think those are your three micro economies or kind of segregated economies that I think may emerge over the next kind of 5 to 10 years.
Yeah. Yeah. And I think like, again, as someone who wants to like potentially grow wealth, there's a lot of interesting opportunities in crypto that might not specifically be like trading or highly volatile. There's a lot of interesting, like relatively safe, yield generation opportunities. But the problem is usually how do you get fiat there and then back?
At a low cost, how do you understand the tax?
Exactly.
There's all these things.
So once those kind of things become better, I do think there'll be a lot more capital that kind of comes into it.
Yeah, I agree. I think you can, obviously DAOs were a really great idea, but they never really took the market.
Yes.
Even though there was a lot of potential there. And I think it was a bit of an unfortunate timing with so much of the NFT bubble also hitting at the same time as DAOs started hitting.
Yeah.
And there was some merging of some of the projects that also kind of intertwine things.
Yeah.
A lot of the yield generated from anything in the market was actually basically paid for by VCs. So that was kind of it's not yield for like from profits or from like, holding a bunch of bonds or something.
Sure.
It was actually kind of like a standard startup that loses money on their client, at the beginning.
Yeah. I think that those were definitely like some of those opportunities. And I think the ones that I kind of think of that are probably more less on that, VC type funded losses. Things like just staking yield from large cryptocurrencies like Ethereum.
All right.
And there's value there in the sense that, you hold that cryptocurrency because you believe in that ecosystem, or maybe you don't even need to believe in it. You kind of see the value that people are ascribing to it. And you know that once you stake the amount of tokens that you have, it provides more security to that ecosystem. It validates transactions. And because you are doing that with your staked tokens, you get a yield, a reward for that. So that is like a pretty stable reward and yield. Sure, there's volatility on the amount, the token itself that you're staking. But the likes of Ethereum being like such a significant crypto, having such a long time in the market, it's not as volatile again as it used to be. And the yield it's generating is pretty consistent.
And you're getting the yield in Ethereum, not in dollars, right? So your yield is going to be, if you transcribe that yield to US dollars, it will change dramatically based on the price of Ethereum.
Correct.
Is the price of Ethereum impacting how much you yield from the staking?
So it depends if you're viewing like the staking in the US dollar terms of yield generated based on how much that you're putting up. But if you're viewing it as, pure Ethereum, then you're mostly going to be compounding the Ethereum that you generate.
Right.
That's right.
Because I mean, that's how I like to really think about businesses as well as, something like an Ethereum or a Bitcoin, right? Is like when I set out, like one of the largest positions I took early when I came up with my own kind of systematic strategy was Tesla. And rather than thinking about it, and I think a lot of people prescribe like their goals around, I want to have, I don't know, $100,000 in Tesla, right?
Yeah.
I don't think about that. I was like, I want X amount of shares in Tesla.
Sure.
Because if I'm true to my thesis, I think that the value of each share is going to be obviously multiples on what I pay. So when I think about building a position, whether it would be in like Bitcoin or Ethereum or a company, I'd be thinking percentage ownership, or like how many of these things am I going to own?
Correct. Yeah.
And I think if you're thinking about staking, the yield is coming in as Ethereum, and maybe that's a part of your store of like that part of your portfolio, perhaps.
Correct. Yeah, and I think that's a great way to look at it, because at least like some, things like Bitcoin that in the beginning were ideally trying to become some sort of currency. And when you compare the price of it to another currency like the US dollar, that's where you see that fluctuation. But one Bitcoin is inherently one Bitcoin of the 21 Bitcoin in existence. So as that comparison to the dollar changes, it makes sense that you're trying to accumulate a certain amount of Bitcoin rather than the value of Bitcoin. That value just changes based on the dollar.
Right. Yeah. And that helps you because it enables you to not think about necessarily the price you're paying, especially if you've got some sort of dollar cost averaging strategy.
Correct.
Right. I think there's less millionaires, right, than there are Bitcoins that are going to be mined.
100%.
So that means, if every millionaire had one Bitcoin, not every millionaire would be able to have a Bitcoin.
Yes.
Which I think are kind of interesting arguments and thought kind of experiments to have around it. And, whether or not that should, it's validated. I just think that I've been writing a memo now for ages and I haven't been able to release it because one, the market keeps changing, and two, I'm still trying to get my head around basically valuations versus valuations versus like where we're at in the kind of macro sphere.
Right.
And on the one hand, I go, well, in certain areas especially, valuations are extremely rich and there's like a relative amount of concentration and potentially complacency. But then on the other hand, I look at the government side of it, and I go, well, none of these governments know how to do basic math, and they can't actually do anything other than run at a deficit.
Yeah.
So so in my head, I go, well, that means that you just want to own assets because it doesn't matter if we're trading in dollars or shells, we keep creating more dollars, which keeps
Yes.
keeps inflating the price of assets.
Correct.
And you don't want to hold that money underneath the bed because you go, well, I'm losing value on it every single year or every single day.
Correct.
And what also happens if actually that then is no longer a reserve currency?
Yes.
Or in the case of New Zealand. In the case of New Zealand, it's more like how exposed is the New Zealand dollar to external forces that are going to impact my buying power?
Yes.
Right? Like we need to think, because as people in New Zealand, we buy a lot of stuff in US dollars.
Correct.
So if we don't have US denominated assets or income, but the US dollar or another currency that we are kind of in a sense pegged to or influenced by keeps becoming stronger versus New Zealand dollar, then we lose buying power. And it's like this crazy stat I read that I think it was, I think it might have been like 40 cents on the dollar of every dollar printed is paid for by non-US people.
Wow. Yeah.
So for 40% of that printing is actually not affecting the US; it's affecting everyone else.
Yeah.
But that was a long time ago. I heard that stat, so it may have changed or be irrelevant now. But it was an interesting perspective, and I think it's something that we have to think about.
Yes.
As people kind of try to buy stuff here and earn here. Everyone I know that's killing it is earning in US dollars.
Yeah. 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 I guess the fact that we have to buy so much in US dollars it's not great when our currency doesn't stack up against it.
Yeah, which is kind of what we're having now. So kind of to move on there, like to like the future, like what does success look like for you personally then over the next 5 years, kind of mixing in what's going on with the GD1's crypto fund, but also your own personal wealth goals and where you're trying to learn and kind of develop yourself. What does 5 years look like?
Yeah, I think in 5 years I probably want to grow our investing practice, like the crypto fund within the firm, in terms of the assets that we manage and are investing in early stage crypto businesses around the world. That's definitely like a big focus. Essentially growing that means that we can just invest in more companies and try and bring that future that we're talking about, where it's easier to access these things faster to the market. That's what that would allow us to enable. And I think in terms of like personal growth, that's really like a lot of my wealth is kind of tied up in my funds, and I think it will be a function of how well I invest as like an investor within our VC fund, and how that would translate personally as well. Being my personal kind of take on like wealth generation, that I felt, considering being relatively young, being quite early on the journey of building wealth and building a career, I always felt like diversification is not the best way for me to create wealth. I felt diversification is great if you have wealth. If you wanted to create wealth, I felt like you had to concentrate and have concentrated positions, mainly because you have limited amount of capital to take risk with. And you can only create, large outcomes if you have concentrated positions. So that was my view, obviously, of it. And I took more concentrated positions, mostly in like crypto and venture capital. Again, that also was a reflection of, the way I thought about the world, where I kind of wanted to go with my career, but also how I was thinking about, creating wealth. I just felt like diversifying too early would just leave a lot of opportunity on the table for me. But, obviously in the next 5 years, if those early kind of investments, those concentrated investments pay off, then that's probably a time to think about diversification.
I think it's really you're hitting on a really strong point of what they don't tell you, you know? So it's like the prevailing wisdom at a very basic, and this is where I think that we're too focused on 15-second reels and anecdotes and like kind of analogies, especially with LLMs now. Right? I was just reading some incredibly scary data around LLMs and how they affect basically how you think and how deep you think already. And I'm already feeling it, by the way. Like, I use a lot of LLMs. I think they're an amazing productivity tool. But what you can't lose is your ability to think, for sure, deeply. So I think that's a risk. But the kind of anecdotal piece, which is smart and anecdotally very, very sound, is diversification is important.
Correct.
But it's, to your point, you got to know what game you're playing.
Yes.
Like, am I trying to generate wealth and am I having an impact on where I'm allocating my resource, of which time is also a resource you're allocating?
Yes.
Or am I trying to outrun inflation?
Yes.
Because being a passive ETF investor, for example, and an index investor that's trying to outrun inflation is playing a different game to someone that is trying to build a business, or is trying to be a value investor, or whatever, whatever game they're playing.
Correct.
They're different.
Yes.
And the best hedge fund managers and the best investors of our time have had that in common, where they are heavily concentrated for long periods of time.
Correct. Yeah. And I think one of the problems is that the conversation about diversification, it's obviously not incorrect, but it's just a lot more prevalent than the idea of taking concentrated positions. People just assume if you're taking concentrated positions, you're just making the wrong investment decision. But I think that's like a function of just how people are being taught about investing.
Yeah, and the majority of the population, we've got this really great net worth tracker, and we do these financial well-being consultations through employers. And what we do is the kind of Dave Ramsey approach of basically, we've got this tool that basically puts all your assets into one place, and you can forecast out into the future based on a number of different assumptions. I can tell you from doing all the consultations we've done, the concentration that everyone is concentrated in New Zealand, and it's like 90+% in property.
Right.
Like, so that concentration exists anyway. It's just that the, $50,000 in equities is in an ETF and it's diversified, but then there's like 1.5 million in property.
Yeah. Very concentrated.
That's really concentrated. And, I think, that's kind of like concentration is kind of seen as a bad thing when it's your portfolio that's liquid, or not when it's maybe your business or your home.
Yes.
But most people that build wealth in New Zealand that eventually get to the stage of passively investing in a meaningful way, I basically would have built a business and sold it and then didn't know what to do with the capital, therefore has to diversify and then invest.
Yes. So at some point they were heavily concentrated.
Yeah. Totally on their business. And I actually think that there's too much of a gap between when you sell and when you then need to do something with it in New Zealand specifically, because the relative financial literacy is quite low. So what you really want is you actually want, through your business life, and it might be 10, 15 years before you exit, you want to be building up that knowledge, right, and learning, so that you're gradually building in good habits anyway for diversification. So when you exit, you have more purpose and more ability to like not be so tied up in the identity of your business, which is something that I felt. I mean, obviously Acuity and Medition are my largest positions by far. I'm like almost exclusively concentrated just in these two assets, or this one asset actually, because it's all in our holding co. And that's not a problem. I'm all good for that. But you do want to plan on how you do diversify over time.
For sure.
Yeah, awesome. So for someone that's not really aware of crypto, kind of moving away from the trading side of, what's a good token to invest in? Like, what's a good place to start if you want to start learning about the actual products behind the industry? Or like, what's a good way to start learning about like the validity of these projects that are coming out there? Like, what's a good place to look and kind of start to learn?
Yeah, I think like the first but boring answer is like reading the Ethereum and Bitcoin white papers.
Right.
But what that shows you is like the fundamental thinking around the creation of why these assets exist and what the initial view on how these are going to impact the world were. They were not this heavy speculation type industry being created, was not the initial thinking, right? So that kind of gives you a little bit of understanding of like why these things were even created and what the initial creators thought the value was going to be.
Right.
But then I would say like the more interesting thing I always recommend people to do is really try and interact with some of these applications, like these decentralized applications or DApps. Just spend some time kind of playing with them, understanding them. And, they're not super difficult. Like if you spend time on a computer and on your phone, like you could figure it out. It's not very hard. But I think that's a really good way to start seeing how it's different to, potentially general fintechs, and be able to kind of explore different things and start to kind of potentially even find areas, or application types that really draw your interest. And one of the companies that we invested in, called Layer 3, they're really interesting because they kind of act as like this aggregator of all these interesting applications and technologies and allow new users to essentially explore them by doing a range of like quests and activities so that they can kind of learn as they're testing out these new products, for themselves.
That's interesting.
It's an interesting way as well for people to potentially get access to their first cryptocurrencies. You might not have to actually buy anything.
You get rewarded because
Exactly.
you're basically testing.
Yeah, because you're, interacting and playing with these new products and learning, and you get rewarded for that. So I think that's a really cool way of getting access and playing with new stuff and potentially even getting crypto without having to put up, your own money. And
Especially the starting point.
yeah,
And I think the cool thing around like the sentiment towards crypto and why it's kind of working is that like with the emergence of AI and the kind of post-labor economic kind of future that we have, like ownership of things that are preferably scarce or provide a utility, like is super important because the cost of a unit of productivity is going down through AI basically and computation. Therefore, the cost I can get from an hour of my time might be getting eroded away.
correct.
So ownership has never been more important.
100%. I just think like fundamentally there's a lot of things that crypto unlocks, at least for different types of people. Like one really cool example, again, one of our investments is a company called Inshallah Network. And what they do is basically building like a grounds up, fundamental driven financial technology platform powered by crypto, but Sharia compliant, right? Which means that Muslims, who make up over 1 billion people in the world, are able to use it and leverage it in a way that is aligning with their faith. Because one of the biggest things when it comes to like Islamic finance is that Muslims generally tend to avoid interest, right? So the current financial
System is all
built is fully interest-based.
Yeah.
So it's very difficult to kind of avoid it, in a lot of senses. And it's very difficult to like grow wealth by avoiding it.
Yeah.
But the way that crypto is designed, you can fundamentally build a whole new stack on top of it, which leaves out, interest-bearing components, but still create interesting yield-bearing opportunities that are not interest-driven. So I feel like the technology, because it's so interesting fundamentally, and the opportunities that it creates that's different to traditional financial ecosystem and infrastructure, just opens a lot of doors for like different types of people.
Yeah, I'm super bullish niche financial institutions that are helping people allocate to their values. I think that's like the mega trend that like Medition is going to like lean into, and we've already started to do that in our portfolio of basically backing fintechs and like lines where, you know, that is an entity that's specifically going out there and helping people enable and execute their strategy that is aligned to what they believe in.
Yeah.
And it's pretty much something I'm like all in on, because the only way you can unravel the kind of status quo of the financial system is to basically believe in the next financial institution more than the safety, or the perceived safety of the traditional way. So I think, yeah, it's totally in line with my thoughts and feelings. But thank you so much for coming on the pod.
Oh, thank you for having me. It was a great chat.
Yeah, I mean, I feel like I would have liked to have asked more questions around kind of your journey, but it was just, we ended up going into some really cool topics.
Yeah.
So it would be awesome to have you on again. Totally.
Yeah, 100%. I'll be looking forward to it.
Awesome, man. Cheers.